Indigo could be facing significant financial setbacks from its ongoing flight cancellation crisis. Now, rating agencies Moody's has warned, raising questions whether India's largest airline by passenger traffic still qualify as too big to fall. The disruptions are credit negative. Now, Moody's analysts Nidhi Dhruv and Vikas Halan wrote in their December 8 note, citing potential losses from refunds, compensation, and lost revenue. The agency also noted that the show cause notice issued to Indigo CEO Peter Elbers would ultimately affect continuity of senior leadership at Indigo. Cancellations have exposed planning lapses in Indigo. The airline failed to effectively manage new crew rules, which resulted in acute pilot shortage. Now, Indigo nearly commands 66% of India's domestic aviation market. While the airline gradually began an 1800 flights on Monday, the damage to its reputation and finances is mounting. Moody's noted the crisis underscores significant lapses in Indigo's planning and oversight. The airline had over a year to prepare for the new flight duty time limitations but failed to build adequate staff buffers. Its lean operational model, once source of cost advantage, lacked the resilience to absorb regulatory changes. The flight emergency follows months of declining on-time performance. Indigo's punctuality slipped to 84% in October, then dropped to 68% in November, reaching a near halt in early December. Moody's also downgraded Indigo's human capital issuer score from 3 to 4, citing the airline's slow pace of hiring pilots. While the agency maintained that the fundamentals of Indigo's Baa3 rating remain stable, it cautioned that the profitability will take a hit in the current financial year ending 31st March 2026. The crisis has had a dramatic impact on investor confidence. Shares of Interglobe Aviation have plunged 17% over the past 8 trading days, wiping out more than 37,000 crore rupees in market capitalization. As of early December 2025, the company's share price has fallen to roughly 4,900 to 5,000 per share from 5,917 on November 27. The market value of Interglobe Aviation is estimated at around 1.9 lakh crore to 2.08 lakh crore. Now, those figures starkly illustrate how quickly the too big to fall airline has come under pressure, from expensive refunds and compensation to reputational damage and a shrinking valuation. The CEO's job is also actually in the line of fire. The warning and the accompanying stock rout marks a rare rebuke for a carrier long viewed as a stable bellwether in India's aviation sector. Investors, analysts, and regulators will now be watching closely to see if Indigo can ever recover from one of the worst operational and financial hits in its history.